Now, Aspen says it's delivered a solid set of results for its full year. The pharmaceuticals group has delivered revenue growth of 10%, with its manufacturing division doing the bulk of the heavy lifting on that end. But Aspen's bottom lines come under a bit of pressure. We caught up with the company's CEO, Saad, for a closer look at that performance. Here's that conversation.
I think it was a period where we went in here with some challenges that we really had to address, and we did. And we can talk about those, but let's just go through the income statement where you've got higher turnover and lesser profits at the bottom. One of the accounting provisions are things called impairments. So we've got intangible assets, which are products largely, and we've got 70-odd billion rand of profits on our products, intangibles on our balance sheet. So even if we write up 1 or 2%, it goes to over 1 billion rand. And the way this works is that you write off your product, you write your product down, but those products that you are higher than cost, you don't write up. I mean, it's really technical accounting. It's got no cash flow implications. And we had 2 big product reductions for what happened in China. The fact that the balance of our IP is worth over 40 billion more than the amount, but we wrote down the ones that related to China. So those impact your operating profit and your earnings per share. So, we look at headline earnings per share or normalized headline earnings per share, and that doesn't come, and then you've got some growth. So it's a bit of an accounting challenge. Sorry, it's a bit of a mouthful.
It's okay.
But it isn't cash flow, and it's not representative of value. I think for me, the key in here are a couple of things. We knew we had issues coming up in China, and they happened. And we've been saying that for years, and it's happened. And the margin loss was over 1 billion rand between that and Russia. But we were able to still grow our commercial pharma business 4% in spite of that. And that was a great achievement. It was organic growth. There were a couple of things that we were able to add on to our portfolio to get us on even keel. And it means that we've no longer got this, what do you want to call it, overhang shadow on the base of the business, being this what will happen in China. The result being that, next year we're hopeful that we're going to get double-digit growth in our commercial pharma. Manufacturing manufacturing, we've invested so much money for so long, and, we had a false start with COVID, as you know. But between South Africa and France, we really delivered on what we were looking to achieve there, and that's what gave us the record half. What the positive on there is that that's only starting, and so we have growing momentum in that business, and that momentum over the next 2 financial years, we believe will deliver incremental EBITDA of about 2.5 billion to the Aspen business. So it's a big. So we're really excited about where we are positioned. We've got a base business that's cleared. We've got a manufacturing business that you say is growing, and so it's an exciting period for us going forward. And we always said, well, we hoped, we said it, but we hoped, and you've got to deliver, of course, was that this second half was a very important inflection point for Aspen. And I'm glad that we were able to deliver on that. We didn't deliver on everything. The impact in China was worse than we expected. But in the scheme of the whole business, I think we're in a very good position.
Stephen, based on that, when we look at what's happened in China, and as you say, it's happened now, can I say that, that you've de-risked from that specific, situation? And from here onwards, what we should see from China is a little bit more predictability?
Unfortunately, a predictability at a lower level from that perspective. But what we haven't got anymore are those products that could fall into that pricing regime they've had, which set prices for you. All the products that we have now have fallen under there. So this is a clean base, and you're quite correct. From that perspective, it's a de-risk base.
With that said, I'd like to speak about expansion for Aspen. I know there were some acquisitions in Latin America, a little bit in China as well, a disposal, I think, also in Europe. So quite a busy time here, Stephen. What are we trying to do with our portfolio of assets at this time?
So Latin America, we've really done well in, and we continue to do well, and we've got a great team, and we're very comfortable in the markets. And it took us a long time, more than 10 years, to be able to get to say that. And we've got some really nice products in there. I mean, there's products like Viagra, Celebrex. So we've got some big brand names there, Lyrica. So we've got interesting products there, and the market reacts well to brands. We basically did a swap on products with a company called Sandoz, where we took over their China business so that we could put it together with ours, because they had all the same issues in their business as us. So together we would have more turnover to be able to withstand, and we sold them some products in Europe. So it was a bit of a swap, you might say, because we see the Chinese market as an opportunity for Aspen. But we think that we've got a different product profile that we'd like to target.
Also keen to touch on partnerships here. We heard of a very exciting partnership with Eli Lilly. Keen to find out where we are on that one. I think this obesity drug craze over the world, I think, is only second to AI. So it's very, very interesting just to see, a local company really getting involved in that space.
Yeah, we're really trying to get involved in that space. We think it's a massive space, and it's a space Aspen should be involved in, given all our investments in sterile. So we've got two opportunities, differing ones. The first one is the one you've noted with Lilly, where we have their products for South Africa. It's been a very successful integration, great people, a very good partnership, and we're hoping to launch Mounjaro, which is one of the Lilly diabetic products, into the market in this calendar year, so in the next 3 months or so. So let's see, there's regulators in the way, and not in the way, there's regulators, approvals required, but it's, we think we're going to be very close to the end of this year. Then there's another opportunity, which is to enter the space. And what Aspen has found is that our manufacturing is held in very high esteem and is very needed. And, there's such pressure on capacity. And we have to decide how we want to allocate that capacity, because our capacity also isn't unlimited. And we've decided to, rather than just simply give our capacity to a third party, is to say to a third party that we have, yes, we will give you the capacity you're looking for. It's not a Lilly or a Novo, but we would like to launch, we would like to have the access to the intellectual property for most of our emerging markets outside of Europe and the US. And that's what we've achieved. We have that access. And so it's a very exciting opportunity that we hope to build on, both to fill our capacities and create a commercial opportunity.
Stephen, as we've seen the mpox outbreak around the world, I've thought about Aspen, because I know, of course, very passionate about vaccination and our own capacity. Of course, mpox hardly like COVID-19, but I've wondered what Aspen's thoughts were about capacity here. We know that we're importing all of these vaccines, and that's maybe okay for a virus or a disease such as mpox. But I'm wondering if we've made the progress that we need to make, even from a policy perspective here, to be able to respond to pandemic.
Yeah, on mpox, 2 years ago, we had a phone call, there's mpox, and then it went away, it died down. And then recently, a lot of people have approached us in various positions to say, Aspen, can you manufacture? We've understood the processes required. The processes have been shared. So yes, we do have capacities. Yes, we have the capability to manufacture it. I think there's just two important provisos. We can't learn the COVID lesson twice. Yeah. We've told people there's two things you've got to do. If you're going to give us a volume, we need to know it's a firm volume and you commit to it regardless. We can't have, like we had with COVID, 1 billion and we got none. And the second one is to say that it costs a lot of money to transfer these products into a facility, and we need those costs covered. So that's where we are. We'll wait to see where we are, but we certainly would like to make a contribution everywhere. But we can't just contribute without, particularly for global diseases, without global support. So, and I think what we're asking for is the very least we should expect. We can't be expected to pay for a transfer and have a risk that there's no volume of take at all.
Thank you for that, Stephen. Before I let you go, keen to reflect on, just the outlook for Aspen. We are seeing a change in the interest rate cycle. I'm wondering if you're expecting that to play into the business at all as well.
Yeah, that's important. We're spending 100 million rand a month in interest. It's a lot of money. So, every point down is, brings it down by 20 million odd. So, that's a changing interest rates a positive for us, but it's also positive for consumers, and and that means maybe people look more closely at your OTC products, etc. So, yeah.
That was the CEO of Aspen, Stephen Saad.